All right, a very good evening, traders. I'm Himalay Bhatia from the Financial Analyst, back with another video. And as always, I'm here with a motive. Today, my motive is to share with you all my analysis on Bank Nifty and the signs that I saw on the chart that showed me reversal and made me realize that it is time to become a bull in the market. Now, this analysis had already been shared on our Telegram channel, which is nothing but a public forum and it is absolutely free. So, if you haven't already joined, you can click the link in our description, or alternatively, you can just open up your Telegram app and search for TFA Investments and join the channel for absolutely free. Now, I do understand that most of you are new in the markets, trying to understand the concepts, and the concepts written in a text manner becomes a little difficult to interpret and understand. So, I am here with the video explaining you what all you could have done and what all you should have seen in the market. So, without further ado, let's get started. Over here, I always follow the market structure. Now, I saw a shift in the market structure, of course. And where do I see my market structure? It is on the hourly charts. Why do I not follow the daily chart for my market structure? Is because I feel that the daily chart is not that sound. It creates a lot of noise and it does not really give a good picture of the market structure. That is why I use the hourly chart. Alternatively, you can also use the 4-hour chart. So let's get started over here. When the banking sector or the Bank Nifty had broken the 35,000 level, which was a psychological round number level, and it was very strong. Once that level was broken, we saw a huge plunge in the market. Now, over here, you can clearly see that the plunge or the fall had happened in a clear lower high, lower low structure. We see a proper lower high and a lower low structure. Now, once the market did make a constant high, indicating a double top sort of a formation over here, but again the market continued to go in a lower high and a lower low structure until the 20th of April. Now, before I talk about the shift in the market structure, let's first talk about how could you have taken a trade. As I always keep saying, do not chase the market. Your risk to reward ratio will not be favorable, and you will only end up losing money in the market. Markets, as I keep saying, are like a piece of a ball. Whenever the prices fall, they will give a bounce as well. And that is where we have to go short in the market, provided the bounce that is there is lower than the previous high. As simple as that. So, how do we calculate that? From a Fibonacci retracement. So, I see a swing high over here. From the swing high to the swing low, just plot your tool and you can clearly see market had taken resistance around the 50% of the Fibonacci level. You can go for a short over here. Markets have plunged. Again, the second time. How could you done the same thing? Capture your swing high to the swing low. Markets over here did breach the 61.8 level, but it ended up taking resistance around the 78.6 level. This is something which is a very rare case in the market. But alternatively, what do we see on the RSI? On the RSI, we see that the RSI has instead taken a resistance at these levels again. Again, going forward, how could had you continued the trade? Markets have plunged. Again, let's calculate the plunge to calculate the bounce in the market. Always remember, it is like a ball. Calculate the plunge, and you can clearly see market has taken resistance around the 61.8, and there was one final move that we can capture over here. Calculate from swing high to the swing low, and again market has taken resistance from the 61.8 level. Not only this, market was time and again following this blue trend line over here, which is coming from the higher levels. If you connect the highs, you can clearly see that markets were time and again respecting this trend line, and this trend line had become very important. And this is one mistake that many traders do. They only plot their horizontal levels that are also known as your static levels. But I urge you all to start focusing on the dynamic levels as well. These are nothing but your trend lines, and these will help you a lot in the market. So until the 20th of April, market was clearly making a lower high, lower low structure, and you could have easily made some money on the short side. However, once the market had reached the 20th April, the lower high over here, there was a higher probability that the market will this time not make a lower low structure. It will try to shift its structure. How do we know that? What did I see on the chart? So let's take a look at it. Over here, we clearly see that the market had made a lower low. Let me highlight this in, let's say, orange. And for the same period, the RSI had made a higher low. This is nothing but your positive divergence. Now, for all those viewers who do not know what a positive divergence is, let me quickly cover the concept with you all. What does a divergence mean? A divergence is nothing but a market term for contradiction. And what does the RSI measure? The RSI measures the strength of the buyers in the market. So what my price chart was showing is that the market is actually not interested. The market is making a lower low in the market. However, the RSI was making a higher low for the same period, indicating that earlier the strength of the buyers was a little weak, but now the strength of the buyers has increased. All we need to do is wait for the price action confirmation and the markets will reverse from that. That is why RSI is one of those few indicators that fall under the category of a leading indicator. It shows us early warning signal and early signs of reversal in the market. It will not always and always give a reversal. Always you need to wait for your price action. Only then we can consider the reversal in the market. However, in this case, since we saw the positive divergence indicating that the strength of the buyers is increasing, doesn't that make it a highly possible case that now when the market will make a low, it will not make a lower low? And that is exactly what has happened. The same thing, let me give you all as a task, the same thing has happened on Nifty. Do check it out and let me know in the comments. Has it happened or not? Again, it's happened on the hourly chart. So I'm making things easier for you. Go check it out. Let me know in the comments. Coming back to the analysis. Clearly, market has made a higher low in this case, a hammer formation followed by a confirmation. Markets have gone up. Not only have the markets gone up, let's try to again calculate how much the bounce will come in the market. So again, we captured the swing high to the swing low. And what do we see? We see that, I'm sorry, the swing high won't be from here. The swing high will be considered from here. What do we see? That the markets has broken all levels on the upside and it has ended up forming nothing but a higher high as well. Did you all observe the shift in the structure? How subtly the market is reversing its structure from a lower high, lower low structure, which is nothing but a bearish trend in the market, to a higher high, higher low structure. Now, this is something that we are seeing from a positional point of view and not from an intraday point of view. Not only that, the RSI was also time and again taking its support and resistance at necessary levels. So I have marked the levels over here. If you all want to know the levels, do let me know in the chat or do let me know in the comments and I will share my levels with you all. Coming back to the analysis, the market exactly took resistance around the zone, which is your 32,360 to 32,150 zone, which is again acting as a very important resistance zone, which was earlier acting as a support. Market took resistance over there, broke this important trend line, and now what has happened? Market has plunged from there, exactly closed at my trend line support, which was earlier time and again acting as a resistance. Not only that, it had a static support as well. So we saw a confluence of support. Over and above that, there are two more ways to look at it. One, again, the Fibonacci tool. How much fall will be there in the market? If there's an upside, We need to calculate how much fall is there in the market. So let's calculate the upside for that. From the swing low to the swing high, what do we see? The market has exactly halted at the 38.2 level, and one more way, again your RSI. The RSI has again taken support around its level. Markets closed over there, and I saw that the markets are at its bottom, and it was worth taking the risk of buying calls in the market, and thereby I purchased May expiry calls, May month expiry calls, because my SL is very small on the downside and I have a good potential on the upside. So that is what happened. Markets opened with a huge gap up. Of course, there was an impact of the ICICI results as well. But as I keep saying, we do not trade basis the news. Market structure shows us everything beforehand. And that is what has happened in this case. Market structure has told me that there will be a reversal in the market, and I was already prepared for it. Market opened with a huge gap up, exactly took resistance around the 32,600 level. Now going forward, make sure you note these levels. One is the 32,600 level and the other one is the 33,000 level, which is also a round number psychological level. These will act as a very strong resistance level on the upside, and I want you all to be very careful of it. So now what is happening in the market? Market has again ended up forming a higher high and a higher low structure. The higher high, higher low structure is intact. The RSI is also taking support around its level. And from here, we can again expect a good upside on the banking nifty. However, there are certain things that are a little concerning. What are those? So going forward, make sure you keep these points in your mind as well. So this was the analysis till now. How did we saw a reversal in the market? Now going forward, what to expect? I've already told you this level of 32,600, which will act as a very strong resistance level, followed by the 33,000 level. Not only that, if we come to the day chart, there is something that we have observed. Let me quickly hide my drawings and let's put in the Bollinger Bands over here. What do we see? The market has given a close below the 20 period moving average. It did attempt to go above the 20 period moving average, but ultimately it gave a close below it. That is something which is concerning for the bulls in the market. Not only that, if you look at the levels again on the RSI, it has exactly closed at a resistance level on the day chart. So try to keep a multi-time frame analysis. These are certain aspects that I see in the market which are a little concerning. And what could possibly happen in the market is markets might become a little consolidated. They might become range bound and consolidated. The range might be between 32,250 or 300 levels and 32,600. Market might range between this level, or alternatively, markets might want to take a bigger range between 32,600 and 31,550 level. So in such a scenario, if such scenario comes, what you can do is buy at the low with a very small SL and short at the top with again a very small SL. Once my 32,600 level is broken, it's well and good. But what is most important is once my 33,000 level is broken. Once that is broken, we can see a good momentum. We will be seeing a good momentum on the upside in Bank Nifty, and that will be it. We have already found the bottom in the market. So that is how you basically analyze your charts. Nothing difficult. As I keep saying, the simpler you keep your charts, the much better. You do not need tons and tons of indicators. Just one indicator that you like. Follow that indicator and take a few other indicators as supplement. 90% of the times it's just hidden. It's just from a reference point of view. If required, we take a look at it, else not. So this is my analysis on banking nifty. I hope you loved it, and if you did like it, if you did learn something new and you thought that the analysis was helpful, please drop a like and please comment in the comment section. I would really appreciate that. I read all your comments. Alternatively, you can also connect with me on the Instagram. Our Instagram official page is at the financial analyst. Do hit the subscribe button as well. Thank you all for viewing this video today, and I shall see you all soon. Have a good day. Bye bye.